Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, September the 23rd, the year's 2019. Let's talk trading. Why you need indicators. Okay, let's get a few things out of the way. I'm not I'm not going to try to sell you any indicators. I don't sell indicators. But you see, there are those people who do sell indicators. And then there are those people who try to tell you you don't need indicators. But to me, that's like somebody walking up to me with an axe and telling me I don't need a chainsaw, or somebody pushing a shopping cart down the highway and telling me, hey, you don't need a car or pickup truck, or, a guy coming up to me with two sticks telling me I don't need a Bic lighter to start a fire. I mean, let's face it, we're in the 21st century. There are things called time-saving devices. And that's what a lot of indicators are. Now, it's true. I probably even said you don't need indicators, but I can look at a blank chart. I can see the wick zone. I can guesstimate the rat zone. I mean, I could sit there with paper and pen because I don't need a calculator, right? Why do you need a calculator? You could just use paper and pen and figure out whether or not prices within 20 pips are the daily high or low. But once again, we're talking about time-saving devices here. So when you see these ads or these forum posters talking about you don't need indicators, take all that stuff with a grain of salt. I mean, really? I mean, staring at a blank chart, do you really think that's the best way to approach trading? Some of these things, I mean, when you really contemplate them, when you ponder them, when you analyze it, when you step back and you really look at what they're saying, it's just preposterous. It's just a bunch of nonsense. But it sounds like they know what they're talking about. When in most cases, they don't have a clue. And you see, when it comes to trading, we want to avoid losing. At the end of the trading session, you don't want to show red. You want to show green. And that's why we always employ our risk and money management. And in fact, there are even some indicators out there that calculate the risk and money management for you. But of course, you don't need that, right? And then there's some indicators that, pretty much show your method on the screen and possibly, when to execute your method. But of course, you don't need that either, right? You can just look at a bare naked chart and expend all this extra mental capacity and energy and time rather than have an indicator do it for you, in the blink of an eye. I mean, like I said, when you really, really analyze what some people put out there, it's just too funny. At least I find it funny. So, once again, fellow traders, you just have to make sure you don't lose any more per trade than what you're willing to lose when you trade. I mean, indicators or not. But let's look here at some charts that have indicators on them. You can see some of these gaps have filled, but we still have a few that haven't. And when I put the video up last night, I think there's some of these that have filled since then. And we're looking here at the weekly chart on the dollar yen. And you can see it had exited that lower wick zone. Yeah, you don't need a chart. I mean, you can look right here and see that. I agree. You don't need, do you need this? No, but it's a great time saver. It's showing the midpoint. showing the pivot point. No, you could calculate those by hand. Why do you need an indicator to put those on the chart? Okay, I'm beating a dead horse. I've made my point, right? But, just remember, boys and girls, fellow traders, that, these videos are for educational purposes only, and your results may differ from mine. And that trading is very, very, very risky. So if you need advice, seek it from an accredited financial professional. So when they lose your money, you know it was lost by an accredited financial professional rather than by somebody you listen to off of YouTube or some trading forum. So we're 217 pips below the open. I mean, I can't help it. We don't need an indicator for this, right? We don't need an indicator to draw the yearly open. So like when you switch the chart here, now you can go ahead and recalculate where the open is and move that line. And then when you come back, guess what? You're going to have to move that line again. So why have an indicator? But I think I'll save some of the indicator talk for, I think I'm going to do an indicator talk each day this week because, not all indicators are the same. They're not all created equally. And once again here, you can see we haven't hit the pivots on the daily. We're still putting in the high and the low of the first day of the week because it's Monday. Yesterday's Sunday, but it's really Monday when Forex opens. So we're still putting in that first day of the week. Here's the first day of the month range. And yeah, you could draw this by hand if you wanted. You could draw this by hand if you wanted. And, you could figure out all these by hand if you wanted. Or you could even, extract this information to a text file and read it into Excel and then have Excel do this. But, so if you want to go through all those extra steps, go right ahead. And first trading day of the month opens. We're just above September and below the rest. And the trading range, we're still above the low of August. And we're outside the trading range of September. Why are these important? Well, price has to move, and usually it has to move outside of those first trading ranges. And you can note right here, you can see how we hit just right around the high of day one of June and July, and then there was a reversal. Interesting how price sometimes respects these levels. And you see here we got close to the low and then it reversed. I mean, it's simple when you think about it because you see right here, there were sellers here. And then down here, there were buyers. And that's what's pushing the price back and forth. But you see, I don't refer to these things as support or resistance or supply or demand. I'm just referring to them as what they are, the high of the day and the low of the day. Nothing more, nothing less. Because once you add anything to it, now you're getting into concepts as opposed to reality. And we're approaching that inside bar that happened 11 bars ago. And once again, you see inside bar, that's just taking, this high was lower than that high and this low was higher than that low. So we call it an inside bar. And we say, well, once the price has to range, so it ranged right out. And we see this pattern repeat itself on a regular recurring basis. And that's why we have an indicator to show it so we know where these opportunities exist. And looking at the range 1, 2, 3, 4, 5, 6 over 100. Of course, we could calculate all these, 24, 25 pairs. Take the high minus the low to get the range. We could do that by hand because we don't need indicators. I know I said I was going to quit doing that. I just can't help myself, so you're just gonna have to bear with me. Only about 5 more minutes left in the video, but it's just when people say stuff like that, I just can't help it. It just cracks me up that people, and the thing is, what really cracks me up is that people buy it, they fall for it time and time again. As you can see here, though, we did exit that lower wick zone of the daily, which was just the low. It crossed that point, and there was about a 23 pip difference here between here and here. So there was the opportunity to make 20 pips or so just taking that trade, which is something we look at every day, watching price exit the upper and lower wick zones. Here's that lowest open right here. You see price got down and turned around and reversed, which is something else that we like to look for because it happens on a regular recurring basis, such as every day. It will we'll have an H1 lowest open and an H1 highest open, and price reverses. And right here, there was the open, there was the pivot, no real bias, took the short trade there, either stopped out or scratched it, you ride it along, short trade paid off. Rat zone, finally we got a rat zone. Let's go back to, I think we usually show this at M15. And as we're waiting for the chart to load, you can still see how you can even take these reversals out of the rat zone using the H1 chart. Here you can see some of the rat reversals that have happened. We just had one about last hour or so. Let's see, yeah, half hour or so right there. Nice rat reversal. Good for about 8, 9, 10 pips or so. And we took out the pivot. There's that weekly pivot target I'm looking for, 107 point, call it 82. And on the daily, we took out the pivot. This one still needs to be taken out. And you can see here, 2019, we had 3 misses in May, so 3 misses in September. Not very many misses. And just to show you here on the weekly, we've had a couple of misses so far this month. And here, one in May, but we haven't had any for what? Excuse me. All of 17, all of 18, no missed pivots. So once again, you can miss it, on this case, on a week. Then it might take a couple of weeks or so to come back and hit it. But these are things that you can almost take to the bank. Of course, there are some misses, you know, are like over 1,000 pips here. And that's why we employ stop losses, right? Now, let's see. Price action, 3 ball at the bottom, green at the line. Wick zones, once again, there was no real lower wick zone. Buying and selling here across the previous days, open, high, and low. Tick chart, just meandering. Einstein line, no trade triggered. Looking at the rat zone on the monthly, or the rather the wick zone and rat zones here. No, these are all wick zones. Okay, boys and girls, that's it. Just remember, it's not what you trade, it's how you trade it. Drain the banks.